We start off with the trade war turmoil. Stocks sinking more than 250 points at the lows as the White House officially slaps tariffs on China and the country retaliates. But by the end of the session, stocks had erased most of those losses. We should note we have seen this movie before, although we've never seen it with the Culture Club. But these trade war sell-offs have become pretty commonplace this year. Check out those red dots on your screen, where each time we sold off, it was really a buying opportunity. And most importantly, the sell-offs have become less severe each time. So if we keep seeing these trade war dips, do you buy them? Could a real trade war escalation finally hit the markets?
You definitely don't go out and buy Culture Club secrets. Just to be clear, Brian. Oh, okay.
I already have them. They come in my CD of the month club.
Okay, so look, the headlines are ugly. The reality of what's going to happen here is I still believe that there's a negotiation phase, and I still believe if you look at the VIX, if you look at the dollar, and if you look at the S&P and where we ultimately close the day, I don't think that this trade war is a run for the hills. I think we had a week, much more important events, and I don't mean North Korea. I mean the Fed. I mean the BOJ. And I heard the Fed governor, the Fed chair, basically tell us that he thinks the economy is in great stakes. That would be very much at risk with people that are running for the hills. So it's been an opportunity to buy every time we've had a trade war segment. I do think you have an opportunity, though, to be trading a range here, and we're near the top of a range. So I'm not freaking out, but I tell you, the S&P doesn't need to go a lot higher in the next week or two.
Well, we've also seen after each of these that they walk it back a bit, right? There's this big escalation, these big announcements, and then Sunday morning at 7:03 a.m., Donald Trump tweets something that says, oh, maybe we're back in negotiations with them. So I think the market's becoming conditioned to that. That does not remove the fact that we could have some kind of escalation by miscalculation. We go too far on the negotiating table. But for now, until proven otherwise, you have to assume that the initial foray, the initial shot here is always walk back.
Plus, it's going to get a little bit real, though. I mean, July 6th is the actual date which the tariffs will be imposed on the Chinese goods. So all of a sudden, we do have a firm date when they will go into effect. And so maybe, can we get something done in 2 weeks? I have no idea.
We've seen him do these things repeatedly, whereas in the 11th hour, he does kind of switch gears and change direction. But I think this one is sort of similar to what the guys were saying. I think this is a negotiation to help his North Korea negotiations. I think he's leaning on China yet again. He got them to the table. He leaned on China to get North Korea to the table. And now I think he's doing it so that they abide by whatever the quote-unquote agreement will be or prospective agreement could be. So I think this is all art of the deal stuff.
Yeah, I totally agree. And I mean, the fact that we are at the top of the range, if you will, and the market is holding in the way it's holding in with all this headline risk, I think it's a very positive sign. A positive sign from the standpoint that I believe when we do get more resolve, and we'll get it over the next, week or so or a couple weeks, I think the market is going to go and create new highs. I think we do ramp up. So I do think it's a buying opportunity on any kind of weakness.
I'll say something to moderate, though, all this bullish tone. I mean, it seems to me like the nationalists within the Trump administration now, whether it's Peter Navarro, you name it, the guys that really believe that we should be on an equal manufacturing kind of employment front, or we should have equal manufacturing jobs in this country, which I think is preposterous, by the way. I think those guys feel with the North Korea trip, there's a lot of chest thumping. We did our stuff. We went into China's backyard. We actually cut a deal with North Korea, or we at least created headlines with North Korea. That's not going to make China feel great. And I think the reality is that I think the tone isn't going to get a whole lot better in the short term. But again,
I think the tone is the only thing that helps, though. I think that he ratchets it up to such a degree that it gets them to come to the table. We saw China come to the table with $70 billion worth of ag, of energy. So the problem is they reward the rhetoric. So he's going to continue
came
with
to
the
the
rhetoric.
table today by throwing extreme tariffs across
they said that from the start, though.
And pulled back the $75 billion additional goods that they're going to buy, right? They took that back.
So then we'll pull back ZTE. So it goes back and forth. You could say, that they're both in negotiations. This has been going on since March. Everything that has ever sold off has been a buying opportunity.
So you sound bullish.
I am bullish, and Powell is bullish, and I think that's what the market's going to take us. So I stayed long. Everything was already long. Tech, home builders now, which I just got long. But stay long Russell.
Well, I think in general, you stick with the momentum stories. You stick with the earnings stories, the stories where you've seen consistent earnings boost or earnings growth. And you look at the stories that basically give you some opportunity for earnings growth. Like a Netflix, I stick with the Netflix trade. Facebook, you're going to see numbers continue to ratchet up in a name like Facebook. And I think Boeing is a buy in weakness every single time that stock dips on any sort of news like this.
To that point, Boeing had been down by 2% at the lows of the session and then managed to pare those losses tremendously by a point and a half on percentage percentage basis.
Right,
So,
which we saw the whole market turn too on that. So,
right.
I mean, Boeing could be the leading edge here and the place what's going to be most sensitive to this. Now, remember, Boeing also has operations in the Middle East that we have to worry about. So this probably is the ground zero stock and something to watch. But again, I guess I agree with the guys. Like, if you want to say, all right, I'm concerned about this trade war, then stick with small and mid cap. Stick with the Russell, that type of thing.
The stuff that I think actually should be doing very well here, and I've been a reflationist over the last 18 months, commodities got destroyed today. And China is obviously the biggest net importer, whether it's copper or whether it's a number of the industrial metals. And certainly look what happened to steel companies. Steel companies around the world today got taken out. And again, steel companies don't really like trade wars, despite the fact that it should be supporting steel prices, which are at record highs. Right. So I don't think that necessarily, I've watched this all happen many times before. I don't know that I want to go in and buy this weakness in some of these resource plays. I actually think you need to see some of this play out. It doesn't mean it changes my fundamental view. Doesn't mean I'm selling stuff today, but it's not a dip that I think it's ready to go in there and buy it. And again, I look at what we digested this week. I don't see why markets need to take the next level higher. I think 2790 S&P top.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.